I can't hear you. I can't start my video either. All right, there we go. Yeah, Bob, you're muted. I didn't realize we were live. What's up? What's up, everybody? I don't know how many people we have on here. It looks like just a couple so far. Ken, say something, Bob. I think that might be you now.
No. You there?
Yeah, I hear you. Yeah, we hear
there
you.
we go. All right. Okay. I'm gonna be honest. I fell asleep.
Emily, what's up, Emily?
You're not even gonna believe this. I literally, like, my wife was laying down and I like put my knees on the ground and I like laid down on her legs and I fell asleep, like sitting, like I was so exhausted. I almost missed this call.
Yeah, all of a sudden I
dreaming.
A telegram. Hey, yeah, we going live, but yeah, whatever.
I was dreaming laying like this, like literally with my legs on the ground. I was dreaming like this for like 20 minutes. I'm glad I got it though, because I was exhausted. So that would have been a nightmare tonight, honestly. So hopefully everybody's doing fantastic. Let me see. Am I recording? Yeah, I'm recording. Cool. And try to keep this a quick one tonight, 45 minutes to an hour. So just make sure you got, is the link sent to emails every Tuesday? If you registered for this, it should automatically be sent by Zoom now. So I don't know if everybody knows that in the chat room or anything like that, but if not, whatever, it's just you guys. That's cool. Bethany, hey, I never invite you because this is late for you, I think. So you could be on here and I could leave.
What's up, Ben?
You could just come on here and I could, no, the link is usually it's tonight. If you just registered for that one, it should be a recurring webinar, Ken. So from this point forward, you should get it. Let's see. I'm just up. So I figured I'd get on. Awesome. Yeah. Great call, by the way, earlier, Bethany. Was that a was that a Pulse X call earlier or was that a regular call earlier, Bethany? I'm just curious.
That was Pulse X today, I believe, for Bethany.
I honestly think you're doing too good of a job. I think you're giving away too much stuff for the Pulse X people. Everybody's gonna hate me for saying that. It's just too good, Christian. It's insane.
Yes.
OBs are okay. You're just too good at OBs. You make the OBs look. You know what's funny is because that's all this call is about is OBs, like supply and demand indicator, pip stacking. Sometimes we layer in Pulse X. A lot of people don't have it. You're very needy, Ken. Let's see. You want your 15 bucks back? I'm just playing. No, I'm just playing, dude. I'm glad you're here with us, man. No, teach me how to trade. Awesome, bro. That's what we're here for, man. That's what we're here for. So today we're going to be going up and down with time frames because we don't really have indications like Pulse X to give us like notifications of trend calls and stuff like that. Did you just have to leave the room because you were laughing? I know you too, I think.
No, I actually had to scratch my back.
Oh, okay. So I'm just letting a couple more people come in because we actually started on time this week. Zoom actually let me start on time, which is pretty weird.
Yeah, that was
10 minutes early. That was
I was surprised.
He wants to throw that.
But then you were muted.
I was on 10-15 minutes early and I couldn't even get that part right. That's fantastic. So today it's going to be a little bit bouncing back and forth between time frames. I wanted to talk about time frame analysis with pip stacking. I wanted to talk about some entries, there's a couple different kinds of entries that you can take and just take notes. And pretty much everything that we do, Bethany, Christian, and I, from all the way at this level, all the way up to our one-on-one mentorship, we focus a lot on order blocks, okay? That's why from the very beginning, if you got in here, most likely you've purchased my pip stacking indicator. It used to be called supply and demand indicator. What's up, Ryan? How you doing, man? And it all started with that, right? Where that's how important the whole thing is, right? We have some people that literally just spent $7 and got funded, and literally that's all they needed, and they stayed funded. And God bless them, because that ain't me, right? I needed a lot of hand holding, a lot of stuff. I didn't have a $7 indicator to buy when I started that actually worked. And you know what's cool about using something like my pip stacking indicator is it's not a lagging indicator like everything else is, right? The reason being is because it's printed. Once it's printed, it's actually there, and you're waiting for a reaction off of that. So we're focusing on with price action always first, okay? So with that said, I'm shocked that there's not more people in here. We
Yeah,
got
that's what I'm saying right now in the
wonder-
group.
Yeah, I don't know. Just freedom live main chat. I mean, there's 70 something people in the last couple of weeks that joined. Let me just, yeah, you do that part. So with that said, I'm just going to get started because I don't waste any time. And hopefully you guys got some questions. Let's see. They were looking for a new link in the Telegram group. Yeah, I threw it in the Telegram group and I pinned it and I notified everybody. So hopefully they see it. Maybe next week we'll text everybody or something as well. The few, the brave, and the needy. Hey, you know what? If we keep it small, that's all that, that's totally fine because then we can be more impactful in this period of time. So just text them. That was the same link weekly. Yeah, they should know if they registered last week. They should have emailed them. That's all. I'll check into it. It's all good. Technology is amazing, right? So I'm going to go and we're going to start at Euro USD. And I'm going to take host back from Christian. Reclaim host. There we go. And I'm just going to jump right into it. Now I'm going to pull the chat box over here to the right. And if I don't answer every question, I apologize. Not really, but we'll get to it. Okay. So let me just start off by saying this is Euro USD. What I did was I just went back at the beginning of the week and I showed you some trades that would have worked nicely. They weren't really cherry picking because I went literally just start of the week and when I would have actually traded, I'm going to tell you why. Okay. So I thought we could do that initially. Let me just go back in time here and then we'll talk about what we're doing. And then Christian, if you want to just chime in at any moment, that'd be fantastic. And
Chimes.
You got nothing.
I will. I'll try.
Yeah, figure out something. You got 20 minutes of me talking to figure out something to say. You've been saying a lot lately, anyways. So,
I
all
just
right.
do
So
2 hours of lives every day.
yeah.
I can't figure out nothing to say.
There's nothing left to say. All right. I'm just going to play this out a little bit. All right. So this came down here into, now there's going to be, see what I was doing here. Hold on. Okay. Here's what I was doing. So on here, I was actually on the 15-minute order block. Now, when there's not an order block in sight for the 4-hour order block, I always put it down to the 15-minute order block, which is in between, right? I always jump from 15 to 4 hours. That's just what I do. I like doing that. And once this turned green down here, if you've been around long enough, and just so you know, we're using pip stacking indicator right now. Once this turned green down here, that means it hit 50% of an order block line. So this is a 15-minute order block. This one's important to me because in my brain, it was going to be either this one or this one, right? So I'm willing to risk on this one and lose in order for one of these to be right. Like in my head, one of those was going to be right. Why? If I go here, like to the hour, let's just say we're creating new lower highs and lower lows, right?
Higher highs and lower lows.
You know why I said that is because
Higher highs and higher lows.
So forget all these over here.
Okay.
Yeah, higher highs, higher low, higher highs, higher high, higher low, higher high, higher low, higher high, higher low, and then what? It should go up, right? Hopefully, it should go up right there. So on the 1 minute, if I am down here, the first thing I'm going to look for is a break of structure out of this 15-minute order block. It came down all the way down here, mitigated 50% of this block. That's our first signal that, hey, it might react off of this block. And then I'm just going to do a simple break of structure, right? So it's coming down here. It didn't break this low. And then once it comes here and breaks the structure, I'm just going to get in with this big stop. It's not that big of a stop. It's 8.9. That's not big at all, actually, but there you go. So I would get in right there. And then my target would be another 15-minute block. I'm not going to do just this one right here. I'd want to get a nice 1 to 3, 1 to 4 out of it, right? Very least, I would go for something right in this area. If this gave me an issue, if it started hesitating, I might just take that one, right? But you see how I'm targeting? Actually, I got to make it brighter for you because I know it's hard to see. All right. So this was my first original. This would be my first original target would be 50% of this 15-minute block. Okay. So I entered basically with a 1 minute block. If I would show you this on the 1 minute, this is what I mean, bouncing back and forth. If I showed you this on the 1 minute, this should be an order block right in here. It could be, sometimes it doesn't show them. Okay, you see how this was a supply or a demand area? The demand area turned into supply. essentially. So once this breaks, I would want to get in, right? So that was my entry, was right there. See that? Boom. So it broke above these areas after hitting this 15-minute block, and now we're taking it up and we're targeting the 15-minute block. I know I probably confused half of you, and that's totally fine. We'll get to it. All right, so here's the target, and then we just kind of let it roll. Now in this area, I might have gotten out in this area right here, just because, like I said, we were up in this block. We were printing lower lows and lower highs at that time on the smaller time frame. But with that said, we were going with the higher time frame direction. So, you know, you could just let it play out. If you're able to walk away, which is crazy. I know Bethany last week ended up going to the gym or something and had like $28,000 trade. It was pretty freaking cool. Mad props, Bethany. And then here we go again. So if I go back to, was this, had a reason to enter this one too? One sec. Oh, just this block here. Like basically, oh, I had it on the 1 minute again. So once this broke that high over here, these highs, I was still thinking, okay, it's going to go up overall because why? Again, we're going to go back to here and think, okay, overall, it looks like it could just keep going and try to break these highs, right? You know, obviously everything's speculation at that point. So we're just going with trend. We're not trying to catch the top. As soon as you start trying to catch the top, that's when you're going to end up losing, right? So right here on the 1 minute time frame, this is why I had this here. There should have been a like little break in this area. Oh, touch the top of this. Now I know Bethany's gonna be like, dude, it only touched the top of it. I came down to this block and just bounced off. So once I start breaking up, I would just take it, right? That's more of a risky trade, but I ended up doing it. So see how it broke right through here. So that would be the reason I would stay in. And then where's my target? Let me go on the 15. Oops, 1 minute. 15-minute order block. Boom. Fire. All right, cool. Technically, you can go to 50% of this essentially, but let me just push play. And we're breaking blocks above, right? So let me just go to the higher time frame so I don't have to sit all day for this. And we're just going to push play and just go. Boom. So that ended up being like a 1 to 12.53 in that area. And if you notice something, this is cool. Like you keep seeing structure breaks and pullbacks in these areas. Like these are all different areas because if we're looking on the 15-minute order block, these are all just different areas that you could be getting in entries right here. So if you were out already in this area and you see this red below, and red's supposed to be at the top, right? That's the supply area order block, right? So if it's breaking highs, essentially you can get in and put a new stop below here and take these small scalps. So if you're more of a scalper and didn't want to hold for 1 to 12 like this, which I'm more of a scalper personally, more of like a hybrid scalper, I guess you'd say, mix between a scalper and intraday. To me, this is like quite long to hold a trade. So I would have been in and out multiple times. This is 3 hours, 45 minutes. I don't know the last time I held one that long, honestly. See. So with that said, let me go back. Where was the next? Okay, so nothing really in this area. You could have taken some scalps off like that block to there. I would only be buying still. I'm not looking for sells. Not seeing any real structure breaks, like good ones. Right here, let me show you what I did there. That being a loss. So annoying. Go back and forth, but you got to do what you got to do, right? So a minute. So right here, this ended up being an L. Entered right there. See how it broke that structure? I don't know why this is pulled all the way over here. I would have entered right there because it broke the structure up. And then I was going for it. And eventually it freaking pushes up and then shoots straight down, right? It takes me out. No problem. Why? Because now let me put it back to a 15-minute block. I think this was from a 15. I should have labeled it so it was easier to follow. It's all good. So right here. So you see how we're in a 15-minute block right here. All right. Remember, these are buy blocks. These are demand zones. So once you start seeing structure breaks out of a demand zone from a 1 minute block, 15-minute block, a 15-minute block, breaking 1 minute blocks, you can essentially enter, right? So let me go ahead and do this. Now, I will still take a trade that breaks the bottom of this because of overall higher time frame trend. Okay. So I'm going to look here and show you what I'm talking about. So this right here is a 4-hour order block that I know should be mitigated. Okay. So if let me show you that. So you see it, 4-hour block. 4 hours, like my guide to see like where overall it should go. It loads. And then the 15 minutes I use as like the in-between, right? To set up like more scalping trades and that kind of stuff. Let's see. So right here, this is a huge, nice unmitigated area. It almost did, but it didn't do it. It didn't hit 50%. So this would be my target area initially. And then if I look on the 4-hour, my only areas I'm looking at on the 4-hour would be this zone right here and this zone right here. I'm only playing between these two areas, right? So because I'm assuming that it's going to mitigate this area, I'm still in a buy mindset. So let me go here. Actually, I got to turn this back. Let me put this back to 1. Okay. Because this is where we enter. You should see a block up in this area. There it is. Okay. So once it breaks this block, that's when I would enter and I'd put my stop right there below that little block right there. See that? So I would have entered. Now I'm in. All right. And I already know it won, so I'm not going to try to act like I wonder if it's going to win. I used to just do back tests and stuff, and it works great. I just wanted to give you guys as much value as possible in such a short time. So just straight up, like there wasn't even like a hesitation. So that's another 1 to 12 right there. Now, obviously, you're not probably taking every single one of these. We lost 1. You had a 4, a 12. That would be 16.5, and then that'd be 28, basically 29R between those 3 trades. And that started on Monday to Tuesday, right? Monday to today. So not bad, not bad. Any questions on Euro USD? Because I did this for basically 2. I only did a little bit for US 30, and then I was going to go into questions and maybe just see where we can go from there, see what you guys wanted to talk about. Maybe we could back test, maybe we could use that kind of stuff as well. But we're now in a 4-hour block, right? So up here, I could potentially look for sells if I saw something strong, but just even that little bit right there, you see that little bit? I could have essentially probably found a trade on the 1 minute to sell off, because it's either going to break this 4-hour high or it's not. So like I could essentially take sells if you start seeing breaks of structure down, meaning if it starts breaking, let me just show you. If it starts breaking the demand zones, the green zones on the way down, essentially you can start taking sells. Like right here, you could have basically sold off there, put your high there. It's a little bit riskier because you're countering. But okay. All right, so that one would have stopped out unless you would have grabbed it. Let me see where we would have gotten in that one. Just curious, short. Where did we break that? I think it was right here or something. Was it right there? Essentially, you could add like a stop like that. Could have pushed go. Yeah, you have a bunch of garbage in the middle there. That's just straight consolidation. But yeah, boom, boom. I mean, it ends up being, I don't know, a little bit, but that would have been a break even. 1 to 1.79 broke structure on left. Broke even there. It's just a little riskier. You're going to lose a few probably if you're trying to catch the top. So that could have been one right there. Essentially, what you saw, where it kind of went below this zone right here. You could have put it there or put the stop there. 1 to 1.98. That's not horrible. And once you start seeing break structures back up, you better just get out, right? So again, you're just trying to catch the top. So US 30, how many people got? All right, lots of people showed up. Cool. US 30, I didn't get to go through all of them. I was just kind of going to show you along the way on this one and start lining up your questions so we can keep going with this. And if there's any kind of questions, that'd be great. I marked this up, I believe, because that was a 4-hour block. Let me make sure. 4-hour. Yeah, that was a 4-hour block over here. And it literally smashed through it. And I think there ended up being like, there's like a 15-minute block below it, if I remember right. And why that's important is a lot of times what will happen is it'll wick out the bottom Maybe it didn't have one. Yeah, there was one here. I don't know why it didn't show up. It just ran out of, let me actually look over here. Okay, I'm just curious now. There it is. Okay. So essentially it was right there. And we go forward there. Okay. So again, when there's no order block in sight for a long time, so let's say it breaks this 4-hour block, I would put on the 15-minute block. And sometimes you got to do what I do and go back because there's only so many lines it'll show on the indicator. So notice how I marked it up manually on the 15-minute here, and that's where I got this entry right here. So if I go back, it came down, mitigated this 15-minute order block underneath a 4-hour order block. And a lot of times they'll come down, take out liquidity, and then play off of the 15. So that's what I was aiming for, because I want you to notice this prior push down took out this liquidity here, all this liquidity here. And then this push took out this top. So it was showing signs of strength going back up. So there was a great chance that it might, because this broke this high and this took out this liquidity, that now there's nothing left after this area, if you notice that, to go and mitigate, to go wick out or anything. So let me go back to the 1 minute and let's look at why I would have entered this. Let's go to the 1 minute block. It's going to look messy here for a minute. So we mitigated the 15-minute block right there. And then now we are looking for a structure to break. Okay. So here's the first structure up right here to break. And if you just get in on a break of structure, right there, boom. As soon as that broke that structure, I put that there. I put it below this low right here. Okay. Now this ended up being a break even. It did decently go up though, if I recall. Yep. So went all the way up to here, ended up hitting a 1.5. The reason I would do a break even is because it did more than a 1-to-1 and broke a structure on the left. So it came back down to break even. I'd get out, right? But it's showing signs of strength. So I would be looking now in this area for another push back up. So this took out that liquidity, gave me a double bottom right here. And then guess what? Right here is the next area to break back up, right? So right there would be my entry. Put my stop below the low. Let's try it again. All right, let's clean this up a little bit because we're going for a higher time frame target. I believe this is a 15-minute. There it is. So right up to the 15-minute, 50%. And let's just push play. See how it went. I just shot almost straight up. Started messing around. And there she goes. So again, because we're not trying to be heroes and go back down, like try to catch the top, where my old self would have been taking this as a sell all day, ultimately. Like I'd be like trying to catch that 2-pip stop with the freaking do a 1-to-20 from here to like I used to do that. I'd show the results, but in between there, I'd lose like 10 in a row. Oh my gosh. So I stopped doing it. So now I just try to go with the flow until I have proof of a higher time frame break of structure going the opposite direction. All right. So here is the 15-minute order block. So what I'm really looking for here is I'd like to see a break ultimately. There's my break. Then in my pullback back into that, remember demand becomes supply and supply becomes demand. That's what I just go by. So this came down. And then we're out. Let's go back to the 1 minute for entry. There it is. My first break back up. It wasn't that great of a break, but I'm just going by the indicator. Actually, I don't know why that. Oh, because it did go up here. That's right. Excuse me. Ends up being a 1-to-2. So I automatically did 1-to-1 plus the break of structure over here. It hit 1-to-2. So I ended up doing a break of structure or break even anyways. If it comes back down, how far did that end up going? 1-to-2.71. So it wasn't a bad trade ultimately, but it ends up break even for me anyways, unless I got out up here on this break of structure back down. So once you see this kind of go like this and then shoot down, you could essentially get out right there if you wanted to. So let's wait again, because guess what? We're printing higher highs and higher lows. So ultimately we're looking for some kind of break of structure to take it back up. We're assuming it's going to keep going, right? There's my block. The break, right? and enter, right? Quite a big stop, 52, but with US 30, you can get away with that. I don't know what just happened there. That's crazy. Go ahead and push play. Actually, where's my target? 15-minute. If I'm close enough to a 4-hour block, yes, I will. If I'm close to a 4-hour block, I might just go for the 4-hour. So let me look on the 4-hour and see if there's a good target there. My bad. 4-hour here. And this was my target area. It was the 4-hour block up here, right? So let me just keep pushing this. And then we're gonna go. And why would I hold this? As soon as this breaks the structure here, this is my cue that this is moving my direction and I'm targeting this 4-hour block up here, right? In that area, I would look to get out because it's starting to break structures down right here. I'm just showing you exactly what I would do. Now, this is creating a lot of liquidity. This is one thing I'm noticing below here. It's creating a lot of liquidity. There's lots of stops down here. So they could essentially force the price down at any moment. So I don't think I did anything after this. But what I would do is, since these are 4-hour blocks, if this breaks above this block, I'd be looking to go to this block. I'm constantly looking, okay, where is the 4-hour blocks at? Where is the 15-minute blocks at? And then 1 minute for entry. All right, so let me read Eric Jones again. Can we explain the higher time frame break to take the trade one more time, please? Can we explain the higher time frame break, take the trade? Right here, when it broke this right here, I think there was a block right here. Excuse me. Yeah. So anytime a higher time frame block is broken, it's a good chance it's going to keep going that direction. Yeah. So I think you're talking about this. So we had the higher time frame break right here. Broke the high there because this is a supply area and we're usually would be expecting it to drop from there, right? But it didn't. It broke the high of that. So now this is going to become a demand area for me. So now I'm looking for buys off of it. And then with that said, if I come down here, now I'm going to drop down to the 1 minute block to give me structure. I need it to pull back first, right? And then once I see a block like right there, that would be my entry. See, it broke the high again. Remember, this is supposed to sell off. Instead, it broke the high of it. So that would be a good entry. Is that what you meant?
Oh, yeah.
You're welcome. Okay. So I guess I'll forward or back test a little bit. So maybe we have a few more questions. And then Christian, if you have any ideas.
I mean, I just marked up a little. Well, I just seen what GJ did in the Asian session on Pulse X. I don't know if we want to share that or not, but I was just looking at things earlier. So
yeah, why don't you share? Give me a little break right here, and then we'll go into that. And you guys could come up with some questions if you want. If not, we will just.
You need it.
There.
Let me share my screen.
If there's an easier way to do this, change role to attendee. No. All right. I guess that just keep making you host. Oh wait, I could just do this. There you go.
So yeah, so this is GJ, and this was all out of a 4-hour order block. So I mean the same thing in a way you could do. That's what Bob was just talking about. What just happened? Oh yeah.
Going on the daily now on me.
Yeah, why is this looking so different now? Oh, maybe because. Yeah. Okay, yeah. I don't know why it came way over here. So this is the 4-hour order block. It came down into this area right here. So let me go back now. Boom. There. Probably should have just not went back there. So either which way. So if you're wondering if the Asian session, I don't really trade an Asian session because I don't have to, but this works at all times, right? If you're trading the right pairs. So this was last night around midnight Central Time, 1 o'clock in the morning Eastern, getting close to the London session, but not there yet. But basically, so what we do, we're in a 4-hour order block. We drop down with the pulse.
This is our Pulse X indicator.
Right, with our Pulse X indicator. You see these trend calls. We got this cloud. and we got the pulse X line, which is the red and green line here that you see. And this is basically the sniper method, and it's taking it. It just helps you see what you want to, where you want to get in, gives you a more precise entry than just jumping in on the order blocks and the breaks of structures, right? So basically, we just wait till it comes back down to the 20 or to the pulse X line. Actually, because it's really not a 20. I got to get out of saying 20 because people think it's actually some type of 20. It's like all kinds of stuff put together. But came down here. Once we break back up above it, right there would be our entry. About 8 pips. I always go for a 1 to 3 to start, and then go from there. But normally
You're in a 4-hour block right now, right?
Yes, this is a 4-hour block. We dropped down to the 1 minute, got our green trend up. We started breaking structures back up. Came back down, get our entry right there, and then it comes down a little bit, and then we smash.
Boom. So as far as like I see to the left there, because they're probably thinking, okay, you had that happen over there too, like a trend with a green. You probably would have lost.
Well, probably would. I mean, this is even earlier. Me personally, I wouldn't really start trading until.
How many were on the left of that? I'm just curious.
This one you never got into. This one you may have lost, but these you would never got into because of with the rules.
The color of the cloud.
Huh?
Yeah.
With the cloud.
The color of the cloud. Yeah.
Right. The color of the cloud never. This one you would have got into. You would have lost here. That's the thing. If you trade management, you would have lost on this one. I didn't even pay attention to that when I was looking at this, to be honest with you. I'm glad you said that. You would have got in right here. Really, yeah, you would have ended up losing this one. That's the thing we teach, especially with you stick with what you're doing. You don't have to run away when you lose. Like a lot of people, like I used to be taught. It just wasn't
Don't
ready
trade
yet.
till tomorrow. Run away with your one loss and feel like a loser the rest of the day. Learn how to enjoy losing.
So if you'd have lost one right here, right? If you do the risk management right, you lose one, you win a 1 to 3, which this one ends up, which I was going to show that it ends up going a lot more than 1 to 3. But I don't know why I moved that like that. But and if you do just take a 1 to 3, right? You're a +2 now. And what, about an hour later from where you were at over here where you lost, maybe
It's
2
not bad
hours
for
later.
Asian session, dude.
But watch this.
Not bad.
Once we open, boom.
Wow. And then you're doing X Factor off that, man.
That's why I love 4-hour order blocks. That's my favorite thing.
So show them X Factor now that we're there, because you would have entered off that line too.
Well, yeah, you could have entered off of the X Factor, but this just kept going up. Hold on, let me see. Eric Jones
had multiple entries according to that. So we have 2 things going on here. We have sniper method, and then we have X Factor after that. Right. That's how we roll the Pulse X calls. And then we go way deeper. So if you like order block stuff, this isn't a sales pitch, but I'm just saying we have 5+ hours of group coaching per week. And I think Bethany does London right now, right? One a week for Pulse X, or am I wrong on that?
I think she might have just started that. I think I seen that last week. That this week she was starting to do 1 Pulse X London session, I believe.
So we have 1 London, then 3 like New York Open, I believe. No, 2 New York Open.
Yorks.
Yeah. And then 1 afternoon and 1 evening.
Right.
So pretty good. Anyways, but yeah, we go real heavy into the order blocks with that stuff, and it's pretty amazing. So keep going.
So yeah, so now, I mean, if you want to change the X Factor, I would just change. I didn't really check this out, but I changed to the 15-minute cloud. We got our green dot, got our green cloud now. I'd wait for something to break though with all these wicks.
Yeah. A lot of wickage. But right there was perfect because
here, this broke that. Once that broke that, came back down, gave us our double. This first candle, second confirmation. That's the entry.
So you guys, he was mentioning like we programmed this earlier, something different. It's not just a 20 line. The way we programmed it was it came the closest to what we call mitigation on the order blocks. Okay. So it's like a weighted 20 with other things. Okay. So it has a 20 in it, but it's weighted differently. So what happens is basically it waits for the pullback essentially. So when we see a rejection off that, usually it's mitigated a 1 minute or whatever time frame you're using it on order block. Not always, but it's the best thing you could do for an indicator. Trust me. Like we've been down this road a million freaking times. So if you can't eye it yet, our mission behind what we do and all that we do is not so that you're stuck with an indicator forever, unless you love indicators. Some people love indicators, but if you want to use an indicator forever, that you can keep using it. But if you don't want to use indicators forever, then we want this to train your eye on how we trade institutionally, right? Not as institutional traders, but smart money concept type deals, right? And then going with the trend, not trying to be a hero. See, the one thing I hate about ICT and all these white cost schematics and all these things, they're always trying to catch the top or the bottom, essentially. Not always, but we like to go with trend and just call it a day. Like, why make it freaking hard? There's no freaking point to make it hard. I've tried every kind of method you could even imagine over the last 8 years. And the best thing ultimately is just go with the trend, right? The only time I'll try to catch the bottom or the top is in a 4-hour order block. And then the best ones are essentially the ones that are in the overall higher time frame trend. If you could catch the one in the overall higher time frame trend, man, those things freaking just move, right? That's when you'll see your 1 to 30, 1 to 40s if you're able to actually hold it, which more power to you. I've only done that a few times. I'm more of, like I said, 1 to 3, 1 to 5, 1 to 7, and I'm totally good. Like I can close that down, go get on the boat, and I'm good for the week, honestly. Unless I see another good move, then I like to take something every single day almost. But what do you mean by trading with the trend? Okay, show them the higher time frame from this. So go to the 4-hour right now. So in this case, you're going, you were going against the trend. No, you're going with it.
I was in, but I'm in a 4-hour order block. So
yeah, he went to a 4-hour order block. So in this case, the 4-hour block above that would be with trend right now, like the overall higher time frame trend. But when you're going out of a 4-hour order block, you could essentially take the lower time frame trend, if that makes sense. What happens after this? Does it go up from there?
no, I believe it goes up a little bit and then comes back down.
Probably another entry down there.
Right.
Yeah, there's probably
another
so
entry.
you see how that worked? It broke some structures to the upside. It's probably going to go all the way up to that next 4-hour block from there.
This is where this is live now. I mean, really, I didn't even know if we were doing this tonight. Earlier, I just looked at something real quick. And I was like, let me put something together just in case.
Yeah.
So I just came real quick. But yeah, that's probably another one out of that came back down here. There's probably another.
Golden. So we're back in the 4-hour block. Came back for more.
Actually, it didn't give us a green trend up. That's crazy.
What the heck? Got to be hiding, dude.
How is that even possible?
I've never even seen that before.
At this one, but how is that not?
Yeah.
Wow.
Yeah, that's weird, right?
That's very weird that we didn't get a green trend somewhere in here.
I've never seen that every day. That's weird. Yeah, either way, you could have, going back to pip stacking, you could have seen it break a structure on the 1 minute going up right there pretty easily and taking it up. Kind of what we were showing you earlier.
Yeah.
So you got anything else?
That's pretty much all I had.
Okay.
But just to talk about risk management real quick, that's the biggest thing, in my opinion, is risk management. You have to figure out what your sweet spot is. My sweet spot's 1 to 3. I go for 1 to 3s and I basically am done with it. But you need to know, you need to have a goal for the day, and you also need to have a stop loss for the day, right? How much are you willing to lose of your account per day if you're having a bad day? Because we're gonna have bad days. We're in a manipulated market playing with people that don't really like us at all. So
I don't have bad days.
Well, we on a trading call, bro. Come on, man. But either way, I don't have many bad days. I don't know when the last time I had a bad day was, but I don't really have to. I don't trade all that. I'm doing such small stuff now. It's not small, but big, but small. I'm not over trading.
Small moves with big accounts.
I stopped over trading. I've finally got control of what I've been trying to get control over, and thank God. And I don't want to talk about it too much, just in case. But
so Randy says, how can you use pip stacking with Pulse X? One of the main things we use is exactly what we just showed you. So you can use it to identify blocks. So why that's important is because you see a break of structure with a trend call, that's going to be like doubly amazing, doubly amazing, right? Because it essentially is saying, hey, I'm breaking a structure and I'm getting a trend call. So it's proving momentum up, right?
Pretty much instead of just drawing the blocks, you just turn your.
Yeah. So later on, like,
stacking messes with my screen.
yeah, I don't even use pip stacking anymore because actually the only reason I built it was for our 101 mentorship students originally, because I was trying to help them identify order blocks. Shoot, I could just get this out to the normal people that don't know me yet, and we could teach order block stuff because it's super, super powerful. Like if you're only trading, like just that alone, guys, if you just zone trade between 2 4-hour blocks and you just wait, okay, it gets into that 4-hour block and you wait for a break structure up, take it to the next 4-hour block, you're going to have way higher success than if you're taking all these trades in between like in between this zone right here. I get the annotation. Option.
Yeah, I mean, we've had quite a few people come back. They bought the 7.99 indicator and they come back and, hey, I just passed the challenge. You're like, wait, what?
Yeah. So if you just ignored all the stuff in the middle right here, and then you're only focusing on when it comes to these areas, like your results are going to go through the roof, right? Now, the only other exception is, let's say it was, how do I clear that? Clear.
You got an eraser at the top.
There.
You got it.
So the only exception is if this goes up like this and you have a 15-minute block right here or something, right? Then, and it pulls down and you always want to make sure it takes some liquidity out. So if it pulls down below there and takes out liquidity and then comes here and then does another break. So if you're on Pulse X, you'll see a trend call, or you take X factor or something like that. And you combine it with a 1-minute break of structure on the pip stacking and this 15-minute block, you could essentially expect it to at least take out this high, right? So from there to there, you got a nice freaking big trade right there. Or you could take it all the way up to this 4-hour block, depending on how you trade. Like me, I'd rather stay safe and be like, all right, I'm going to get out at that block. I'll wait to see what it does here. If it breaks this high and then pulls back and does something here, then maybe I'll take it up to here. I'd rather, because you know how many times I would see it. I'd be in a trade and it's almost to this block. And then it just doesn't. It just goes all the way back down to my break even. I'd literally watch it do it. I'd be up so much, and then I'd be like, no, it has to hit here, and it doesn't have to do anything. So I was like, you know what? I'm just going to go from block to block. I'm going to wait. There's nothing wrong with grabbing a 1 to 3 or 1 to 4 or 1 to 5, and then wait to see what it does and see if it comes back and then pushes back, right? You might as well wait and just see what it does. Grab the profit off the table. Don't be a freaking hero every freaking time you're in a trade thinking you're trying to prove something to yourself. Like the fact that you're in profit at all is ridiculous. Like you're not supposed to win in this market, and it's not easy. I'm not saying this is easy, but I will say this is it. If you just become a zone trader and forget about all the other crap out there and just learn how to do an entry off of this zone to another zone, you're going to be great. Can you get wicked out? I love getting wicked out now. You know why? Because if they wick me out and they're taking out all these stops and it doesn't go down here, right? Let's say this is a block right here. I know I'm getting really sloppy again. And clear it all again. If I had a block right here, which we do, and it comes down here and wicks this out, this block, right? Wicks me out, takes me out once. That's fantastic because this is going to be a bigger move. Chances are it's going to come down, mitigate this area. If it rejects these areas, that means they're protecting the lows. And you'll see some kind of structure break up, and this will be an even bigger move. So you only lost 1 over here, and then you gain freaking plus 20 over here. See what I'm saying? That's why Christian, what he said is so huge. That's so key, is to focus on a risk management plan. What we teach everybody is, I say, do 1 to 3s, and then until you're consistent. And if you want to just stay 1 to 3s, stick with 1 to 3s. If you want to get higher reward later, that's totally fine. If you're doing like 1-minute order blocks, I wouldn't go any lower than 1 to 2s personally. That's just me. If you're going in between just scalping, because you'll have I said it last week, I believe there's, I think 1 to 1 people, or even less, 1 to 0.5. We've had people that had lower reward than their risk, and they would average 0.5. And the funny thing is, you're, like I said last week, you're getting that dopamine hit over and over again. You're like, win, win, win. And all of a sudden, because you don't have any kind of actual trading plan, you don't want to lose, right? So you get this mindset of, I don't want to lose. I'm not going to lose. This is dumb. And then all of a sudden you'll like let it take out 5 or 10, God forbid. You just lost everything you just earned. How many times did that happen to you guys where you're up 5,000 for the day or whatever? You're up +5 for the day, and all of a sudden you're -6 because you hate losing, right? That's probably the problem. What I would do is lower your risk and then go for a higher risk reward if you have that issue of over trading. If that still doesn't do it for you, lower your risk again, 0.25%. And you'll be shocked. I passed challenges. I've shown Christian and Bethany, I believe, me passing challenges with 0.25% risk. It's crazy. Like my average was 1 to 7 risk reward. And I would just do 0.25% risk. I'd pass them in a week. So you could pass challenges, like funded prop firms challenges, with as little as 0.25 with way less stress, actually. But here's the funny thing about risk reward is once it gets up to 1 to 4, 1 to 5, it's pretty much left your freaking like break even zone for the most part, especially if you're going to a higher time frame order block in higher time frame trend. The chances of it coming all the way back down here are very low. That's when we call it a runaway. So essentially it literally could just run away from you. You could literally hold it. And that's when you'll hit your 1 to 20, 1 to 30. Because you're at such a low risk that even at 1 to 4, you're like, it's 2%. That's cool. I wouldn't care if I broke even on that. All of a sudden you go for a walk or something, you're at a freaking 4% gain. And now we're talking. And then you have other decisions. You're like, you know what? I'm totally good with just making 4% today. That's cool. That's a good place to be in.
Yep.
Any questions, guys? I wanted to make this shorter. So you go, I don't want to.
There's a question in the question and answer section from Lou W. Can you explain floating P&L and how to mitigate and pass a challenge?
Yep. Yes. Okay.
Do you want me to let you share the screen now?
No, it's fine. I'll just use yours. So let's do a 5% max daily drawdown, 10% overall drawdown. You can't lose this, right? Or you lose the challenge. And then the other question was to mitigate and pass the challenge. How to mitigate. I don't know about the mitigate part, but what I do with people, I always use the house's money. This is one of the ways that I trade. Let's say I did a 1% trade. Let's say I started with a 0.5% trade, right? And I hit a 1 to 3. Now I'm up 1.5%, right? Essentially the house's money, right? It's the market's money. Now, depending on how you want to roll, you could take 1% of that or 1.5% of that, because the worst case going to happen is you have to start over. Let's use my Forex funds as an example. You need 8% to win phase 1, 5% to win phase 2, but we'll just do phase 1. Okay. So if we win the first one, we're up 1.5%. As far as your question about the floating P&L, that's let's say you lost, before I get into this, let's say you lost 1%, so and we're on a 100K account. Okay. So it'd be down -1,000, right? And for some reason you couldn't get out of your trade on the next trade and you hit -4,001 while the trade is open. On top of that -1,000 lost in that day, that means you're -$5,001. I think actually if you just hit 5,000, you'd lose too. That would be 5% of 100,000. Does that answer your question? So if you were already down 4,000 that day before 5 p.m. Eastern, and you lost one more, or let's say you didn't close the trade, it was floating and it was -$1,001 floating and never closed it, you still lost -5,000 in their eyes, because that's still money risked, right? Hopefully that answers that. But here's an easy way that I pass challenges. Okay. Pretty quickly too. I passed some challenges in 15 minutes doing this. So basically, if you're up, everything has to go your way ultimately. But if you're up like a 1.5% and you risk 1.5% and hit another 1 to 3, 1.5 times 3 is
4.5.
4.5. So then we add that up. We're at 4.5 plus 1.5 is 6.0. So we're up 6%. Oops, 6% with just 2 trades. All house money, right? Just 2 1-3s. It really isn't that complicated. Especially like when I draw it out, it's like, what the crap? This is freaking easy. Then if you want to, now you could be super freaking easy on it. You could just do essentially 1% trades. Okay. And you have 3 swings at it. So if I do a 1% trade here and I win this, I win 3 trades in a row with just this, essentially I'm at 9% and I pass phase 1. If I won 3 trades in a row using that strategy right there. Lou says, so basically it's joined open trades if more than 1 trade is open at the same time. But if I do 1 trade at a time from open to close, nothing will float. If you have 1 trade open, that's a float, right? You're floating that 1. So if you lost 4,000, they were already closed, and you're in one that hits negative 1,000, your floating equity, right, counts towards your overall loss, right? So if it's negative 1,000 and you were negative 4,000 for the day already, then you lost the challenge. Okay, cool. All right, any more questions, guys? Hopefully somebody caught this. If you knew how powerful this is basic math. But if you knew how powerful this is, my gosh, like never were you at risk, okay? You never lost anything because you always had house money. Like I have to keep, I'm gonna do that one more time. If you risked 0.5% on the first one because I hate going negative, right? Or maybe you're a person that hates going extremely negative. Let's say you lost the first one, do the math. Okay, now you're down negative 0.5%. You win the next one. Now you're up plus 1%. Now you risk 1%. Now and you win that one. Now you're up 4%. Now you can just decide, okay, do I want to risk half of this? Like how much padding do you want to have on the account of the house money? Let's say I risk 2%. Guess what? If you risk 2% and win that one, you're now at plus 10%. You've already passed the challenge. You could have got out early and passed the challenge, right?
Get out at a 1-2 on that.
Yeah. So if you, let's say you're negative 0.5% again, you risk 0.5 again. Now you're plus, let's say you won this one, 1%. Now you lost, and let's not say you lost. Let's do 1%, say you're plus 4% again. Let's say you lost this -2 or -2, so now you're at 2%. So you're still at house money. The only time you were ever negative was here. Okay. Plus 2%. You risk 2%. Now all of a sudden you are at plus 8%. You pass the challenge. So that's if you won 4 in a row there. There's ways to win at 3 in a row. There's ways you just never want to risk what you don't have, in my opinion. You don't want to be a hero and get in multiple positions.
That's
you
actually losing 1, winning 1, losing 1, winning 2, losing 1, winning 1. So that's not 4 in a row. That's actually.
Oh, my bad. Yeah, this was a loss. So that was a loss and this was a loss, right? So 2 losses, 3 wins.
And you still.
That's huge.
That is huge. It's been
I
a
mean,
minute.
that's my favorite way to do it.
That right there is probably enough value for to stay in for $15 for life.
If you use it, that's the thing. It just depends on what people will actually use. This right here prints certificates for me. Anytime I want to get funded on another account, I just do this exact plan. I don't need to do another plan because guys, you have 30 days to make this finally work out. Like just never, like you can even go negative heavy. Oh, let's go one more step. And this is what I teach everybody. Let's say you just lost 3 in a row. You're negative 1.5%. You just don't want to go too deep. Then drop your risk. Okay. 0.25% risk. Don't keep, a lot of people, what they do is they increase it going backwards. Never increase it going backwards. Don't be like, I'm going to risk 1.5% or whatever because I'm pissed off or mad and I want to get it back to break even, blah, blah, blah. Just screw that crap. Just do 0.25%. I promise you it's way easier on your brain. The easier you could be on your brain, the better this is going to be. Get in a trade 0.25% and go take a walk. You know what I'm saying? And you come back, guess what? You could be halfway back already at a 1-3. You can win 2 in a row and you're back to 0%. You start over again. and do the original plan again. Keep doing that, and eventually you're going to freaking pass the challenge. Like, it's really hard to lose this way, because you know why? Because unless you actually just don't follow the trading plan at all, and don't do entries like we teach at all, but that we do lose, but we don't lose like 4 in a row, very rarely. So if you lost 3 in a row here and lost another one at 0.25, you'd be at negative 1.75. You lost another, you'd be at negative 2%, which is nothing. Then all of a sudden you get a runaway 1 to 10 on a 0.25, and you're up 0.5%. And then you start over with the original plan. So did that help anybody? I'm just curious if that helped anybody.
Help me again.
That's going in my my Pulse X, it's my funded program, so that's for free. Hey, video editors, don't use that content for free. Okay, that's just going to my paid people. All right, cool. So let's see. Numbers. It's such basic math, but guys, I promise you, like, when you could turn this into just a calculation, then all of a sudden you're not emotional, right? It's like you just follow the freaking math. That's it. You follow the trading plan, follow the math, take your emotions out, as hard as that is, and and what I tell everybody else is, if you can't leave the trade going and go take a walk, let alone leave it going to sleep. I don't like leaving trades open when I sleep, but let's say you get in a trade and you're like just freaking out, then your lot size is too high. You need to lower your risk until you get more confident with hitting higher risk reward trades. For a lot of you guys, 1 to 3s is like massive. I remember Christian, it was massive at one point. And at one of my mentorships, I worked with this guy. He wanted me to hit 1 to 20s like every time. I was like, dude, that ain't me. But he did help me see that I could hit 1 to 7. So one of the things that we do with our mentorship students at one point is try to lower the risk enough to where they can hold the trades for as long as they can, like 1 to 7, 1 to 10. So they can see, wow, that actually plays out a lot more than not. So I think that's it, guys. Yeah. So hopefully, yeah, let's end that. So how do we get this screen share off? Just want to, oh, there we go. Okay. Thank you guys so much for showing up. I know we had a little tiny bit of technical difficulties in the beginning. Thank you, Christian, for always being in space with me at night on Tuesday nights. And thank you guys for showing up, and keep showing up. Guys, let's try to be more active in the group, in the FX Freedom Live group. Ask questions in there, show trade ideas, trade setups that you're doing. Going to celebrate wins and show the results that you got. Every time you share one, it's motivating 10 other people, I guarantee you. And share this with your friends. We'd love to have you guys on. We'd love to keep growing this. We have almost 100 people, and it's only been a couple weeks, and I didn't really push it too hard. I just wanted to grow this kind of organically. And just I appreciate all of you guys. Oh, and there's one last thing. Actually, I didn't even mention this. If you go to my Instagram, I'm starting a brand new Instagram account, and follow me. That'd be freaking fantastic, because it's literally 0 followers right now. Okay. So what I'm going to do is I'm going to give away an Amazon gift card, $50 Amazon gift card, maybe 3. I'll give away 3 $50 Amazon gift cards. I'll announce it on Friday. Just for following me. I'm going to do it randomly. And it's a big Pippin FX. Okay. And also, just so you know, I'm starting a new program with Pulse X for 8 weeks. It's an 8-week program with the whole intention of getting you guys funded. Okay. So if you don't have Pulse X yet and you want to be a part of this case study group, you could just message this, go to this profile here and just message trader to this right here. And I'll get back with you, see if you're a good fit. It's going to save you a lot of money. I promise you're going to love it. And what's cool is you'll get access. If you're a newer trader, it's going to be amazing, because I hired another coach to basically sit in a room and answer any kind of question you could freaking imagine when it comes to all the new stuff. So connecting a broker, taking trades, what's a pip, whatever you go on baby pip for and try to find over there, he'll actually make videos for you specifically and hold your hand and get you going, and then get you pushed to the direction of trading with Christian and Bethany and myself with pip stacking, but not pip stacking, with Pulse X. So when you combine Pulse X and pip stacking, it's just amazing. So go here, guys. I really appreciate you. On Instagram, Big Pippin FX, and then message trader if you're interested in finding out more information about the case study group. But I wasn't going to pitch anything tonight, but I am excited because I'm finally launching, and I plan on putting up a couple pieces of content per day which is going to be freaking cool. So I think that's it, boys and girls. Hopefully have a fantastic rest of your week, and stay in contact with us all throughout the week. All right, guys, God bless. Have an amazing night and take care. Beckett out.
Y'all be blessed.